Hello and welcome to this very special conversation. Joining me today is Lovaii Navlakhi on this conversation, which is brought to you by the Bombay Stock Exchange Investor Protection Fund in association with the Money Mile. Lovaii is one of India's best known certified financial planners. Thank you very much, Lovaii, for coming by and speaking to us. Difficult times we live in. Lovaii, one of the big products, or what do you call it, more like a feature, is the systematic investing, and a lot has been spoken about how systematic investing can help you build a lot of wealth over a period of time as well as beat volatility. We've seen some very sharp volatility ever since the pandemic hit us, a sharp fall initially and then an equally sharp rise as well over the last couple of months. Can you explain to our viewers how SIP works, and does it help beat volatility from the recent example that you've seen over the last 6-8 months? But more than that, even for the long term, what is SIP? How does it help beat volatility?
So first and foremost, SIP really is a great sort of product to allow you to average your entry price in investing. So the SIP is allowing you to do two things. So one is that it is putting aside or ensuring that certain money that comes to you every month is getting deployed without you having to worry about it. But silently, what it's doing is it's building discipline. And according to me, discipline is probably the single most important ingredient for you to make wealth in equity markets. Now, when you look at SIPs, people do look at a time horizon of 2 years, 3 years, and look at some sort of short-term times where whether SIP is making money or not making money. But I'd like to just, suggest to people that imagine that you are in a position to invest something like 25,000 rupees every month. And this is basically your savings that you're making. And if you invested this for a long period of time, let's say you started off at the age of 25 and you are investing for 30 odd years. Now you do know that returns on those SIPs will be dependent on how markets perform. And again, going by long-term, the BSE Sensex performance, etc., we do know that it's quite reasonable to expect, like a low double-digit type of return. So even if you were to get something like 9% post-tax, so 10% return, but 10% tax, and you got 9% post-tax, at the end of the 30-year period, your 25,000 rupees a month will be worth 4.5 crores. And if you were just a little bit lucky and you got, instead of 9%, you got 10.8, that figure really jumps to 6.5 crores. So there is a ability for you to generate significant amount of wealth by forgetting that there is a certain amount going away from your earnings and being deployed for the long term. So really, I think SIP is a magic formula. We are talking close to Warren Buffett's 90th birthday, and he's been investing for really long. We do know that a large portion of his increase has come toward the later part of his years, and that is simply the magic of compounding, because he's continuously accumulated units at lower values. And when the market sort of moves up and the values move up, you get the benefit of the entire sort of investments that you've made at lower prices.
All right, Lovaii, thank you very much, like always, for coming by, sharing your perspective and your experience with all our viewers. Thank you once again.
Thanks so much.